Aloha and welcome to Java. Thank you all kindly for joining me. This is for Thursday, it's June 13th, 2024. Kind of seems like an Ides of June if there's such thing. Anyway, want to go forward, just one more caution. Careful what people are watching on this box. I thought this was really representative. So we have to be cautious of what others are seeing and the narrative getting out there. So let's go into the markets. We've got our relative risk indicators. The MMRI is at 280.2. It's pulled back slightly. So still in high risk territory. And in my mind, as well as quite a few others, kind of an interesting move. We'll go into a little more. We've got the fear greed index edging back towards greed. So more buying in this market right now. The sentiment after the core inflation readings, which they were in the as expected range. They didn't want to move markets too much because then they have to do damage control. And it's not good if it moves severely either way. A lot of people are talking about less inflation, and I agree, less inflation would be good, but a severe move down puts us into deflation, which is depression. So right now it's depression versus hyperinflation. My opinion, I think we're going to get both. First one, then the other, if this plays out historically, and it's beginning to. So we had the bond yields yesterday and relative strength of the dollar, or the Dixie. Those both increased. They both moved up. But with both of these moving up, it should have pressured stocks more than it did. And that is the mystery of yesterday amongst most of the economists right now. So we're watching cryptocurrencies recovering from a dip they had yesterday. So I'd like to talk about gold, because the gold mining industry, as I was talking about yesterday, they're having an issue finding more deposits with gold. So it's becoming a little more scarce. That's bullish for the price going up. Bitcoin also, if it stays above the 66.2 thousand, otherwise could drop down to about 61,000, has strong support, 61,200, and really strong support low is 56.8. Now, this is not financial advice, but if we happen to get there, first off, 56.8, I'm a strong buyer. But secondly, that means our environment is not going to be good. So we've got stronger stocks at the moment. Looks like grain at the open for the indices. Gold under a little pressure, oil under a bit of pressure for demand. And that could continue for a bit. That's got lower lows. Anyway, if you're not a trader, doesn't matter, other than oil price going up is highly inflationary. So this could show a pullback into where the Fed does not have to cut. And that's part of what Powell was getting at. So when they say they see some progress on inflation, but they are looking at other numbers, they're looking at jobs. They have two mandates, remember. One is price stability, the other is employment. And basically, he came out admitting, first off, that most of the job strength is due to migration into the country. We've had an overwhelming amount, and then also part-time jobs, but it doesn't matter because those are all counted in. So as long as those numbers stay good, regardless of the reasons, even though there's no fundamentals behind it, regardless of the reasons, he can focus on not doing rate cuts and basically continue what they say is the battle of inflation. I think they're about to lose control, and that's because the Treasury's on the other side. We'll go into that in a moment. But right now we've got mixed open, mixed futures, kind of saying weak, calling out a weak market, may open green, but don't expect that to continue throughout the day. So caution, this is on a topping here is what this typically looks like for a market. Okay, so we've got a calendar coming out, jobless claims coming out in a bit prior to market open, and we've also got the Fed policy reports coming up. So as I said, the market's moved up despite the news should have put pressure on it, but did not. But we may see that correct today. So we've got uranium, as I was saying, energy is the main underpinning, not just this market, but the military industrial complex for everything continuing on. And they want this to continue. They need it to continue. This debt issuance must continue, or the current banking system will completely fail. So, moving back towards uranium, as well as probably if this doesn't work out, they'll be going back to coal also, which is, the dirtiest of fuels, but it's also the least expensive. So we've got the Fed's $1 trillion pile of paper losses, mostly on the debt, turning into actual losses as the bonds in the notes that they are purchasing and that they are holding expire. So as they expire, then you're forced to basically replenish them at whatever current rates are. Since they didn't cut rates, that also affects the debt for these larger banking systems. So we've got Eurozone industrial output unexpectedly falls in April, and we know they've been going down. And then also this is affecting labor, but they're watching lagging indicators. So we've got Russia's hit by new US sanctions, halting euro and dollar trades on their main stock exchange, which is the Moscow exchange. So they're basically fully separating. They've got a new replacement for the SWIFT system with the BRICS nations. I haven't spoken about that a lot, but it has continued in the background. We've just had so much else going on. So I want to mention a couple of other things. The real economy, because housing is at the base of the American economy. And the housing market in Florida, which was one of the hottest, aside from California, California is also cooling in very rapid fashion, prices pulling back, which for part is a good thing. However, too rapid and too deeply would definitely hurt the economy, would send it into a depression because that can spiral and become self-feeding. So we have to watch very closely how that continues and how troublesome it becomes. So we've got Powell saying fixing inflation is, quote unquote, as he says, the best thing we can do for housing. So part of that with the payments so that people will purchase and trade out of their homes is partially true, but there's the other side as well with the construction and the jobs. So if housing does not improve, job sector could drop precipitously. And we're watching that in other sectors. So we've got the story, Americans feeling better about the economy for the first time in 4 months. That's not true in general polls. This is propaganda by mainstream media to make people want to go out and spend, saying everything is fine. They're feeding these lines out to try to spiral down the economy. They know it's crashing. So we've got FedEx tells the truth in what's going on. We always look at the background with what's going on with these things. So we've got the FedEx cutting up to 2,000 back office jobs in Europe because there is weak freight demand. So weak freight demand is all of the goods, no purchasing going on. So they're dropping. We've also got US luxury travel agents. So far, they're seeing an underwhelming demand for the Olympics going on in Paris, but that could be a few reasons. Also, I think Paris was perhaps not the best choice, but there is a tremendous amount of money that is spent during the Olympics, and this is really going to hinder them. So, in other news that goes along with this, United States healthcare spending rising to 4.8 trillion, outpacing gross domestic product. So, a lot of the healthcare is government subsidized. So that's a flag, being more than the United States produces, as well as just saying the general welfare of the country. Now, the other thing that I want to bring up, other than the Americans are feeling better about the economy for the first time in 4 months, they're going to be looking at jobs. And until jobs are crushed, there's not going to be rate cuts. So, but as I said, they're looking at lagging indicators, so it could happen all at once. But he's talking about the rate path. So he doesn't want to cut rates until they're going to have to continue with that. So we've got a lot of things going on in the background with these horrible politics, actually. OpenAI expanding lobbying team to influence regulations. They're openly saying they are expanding people. Their sole job is to go into Washington, D.C. and pressure politicians to pass legislation in their favor. Let me know how you think about that, that all this lobbying should be allowed. They also set aside funds to basically purchase these politicians. So we've got larger companies, BlackRock and the likes, that have been doing this for some time. So a couple of other news stories. We've got Trump saying he wants all remaining Bitcoin to be made in the United States. Speaking about the mining companies, Bitcoin mining. So, for instance, Riot is one of the larger companies based out of Texas. However, some of the larger cryptocurrency mining companies are actually Chinese, and they came up first. So they're going to continue mining. So that's not going to happen, although it would be good for them to continue mining Bitcoin, in my opinion. So we've got PayPal hiring high-ranking marketing gurus to delve into payments data. They've got professionals that are looking into what you spend on, how much you spend, and they're going to redirect all of that. Now, these are the same people that they're integrating with Apple, Google, Facebook, Meta, whatever, so that when you make your payments, this is all pre-done, basically. They will be collecting transaction information, and that's all going to be built into your profile, which will move forward with the digital ID, central bank digital currency, and also what is moving forward. So basically, a lot of freedoms are going to go away very soon here. So during all of this time, while the prices dropped, the larger owners of Bitcoin buying even more. I suspect a lot of these are the hedge funds, BlackRock, and then also for the ETFs. Now, ETFs are not Bitcoin. That's like ETFs for gold. It's paper contracts. You don't actually own it. So, in my opinion, you would be better off. You don't get dividends, but my opinion, you're better off buying the asset, which is Bitcoin and gold itself. So it is one to say with that Australia's largest bank just put the Bitcoin ETF onto its trading platform. So they did allow that ETF. I believe they were one of the whales that were purchasing Bitcoin. It's at a low right now compared to where it's going to be. Could it go lower? Yes, very likely. There's actually a couple of lower levels Bitcoin, but very definitely. So what we're watching as far as the war front, we've got the European Union agreeing to give Ukraine $1.6 billion from the Russian assets that were seized. This is a large contention point, and it's going to really irritate the Russians. So now they've got brought in their Navy ships and basically put them off the US Coast Guard. They are right off of Havana, is where this one is docked. They were also doing exercises, shooting missiles, and out in the ocean just off the coast of Florida. And this is kind of driving the point that the United States and NATO are doing the same thing over Ukraine. So we've got G7 going on in Italy right now for 3 days. Along with this, the United States just increased all of the sanctions on Russia and targeting businesses in China, UAE, and Turkey. So all of those countries, especially Turkey, is in the watch and turning against the Western, quote unquote, Western world. So they are going to sign security agreements. Translation, we're going to be providing more military, more aid, and also soon enough troops. So we will be deploying United States and NATO troops to Ukraine in an official capacity. They're already there. So this is just the current President of the United States heading back for G7. Now, these are the people that make these decisions for us. So with that, I just want to caution you on today could be an eventful range trading chop. So be cautious of that. Very good time to hedge against a market downturn. Again, not financial advice, but it's very inexpensive insurance at the moment. So with that, my friends, until I see you again, stay free.